Hello everybody, this is Patrick MontesDeOca with the Equity Management Academy Live Trading Room special report on the silver market. This is the latest Seeking Alpha report that we published on October the 7th, 2019. Silver special report. Current prices might be a thing of the past sooner than you think. We have identified for silver the weekly average as we came into this week at 1747. The extreme levels below the mean are buy 1 level at 1710 to the buy 2 level at 1656. The close above the mean on the weekly data of 1747 activates the extreme levels above the mean of the sell 1 level at 18 and the sell 2 level at 1838. It appears that to be a major breakout from the weekly sell 2 level, in addition to the breakout point from a bearish down flag, which is extremely bullish for the market, projecting prices in the 20s and even $21 and $22 levels over the short term. This was the report that we published, as I said, in Seeking Alpha on October the 7th, and let's take a look and see what the market pretty much did since we published this report on the 7th of October. As you can see on the chart, the market went up to the 18 level as anticipated on the report, and as the artificial intelligence tells us that when the price reaches the sell 1 level, the automated algorithm is identifying a 90% probability of a reversion to occur back down to the mean. And as you can see, on the 9th, coming into this week, the high was made 1772. The high was $18 an ounce and the low was 1772. The market closed at 1776.50, below the weekly sell 1 level, activating a short trigger and automatically activates the target of the mean below. And as you can see here, this is a textbook example of the reversion to the mean principle using the algorithm that identifies that when the price reaches the target, it activates a 90% probability of the reversion coming back down to the mean. On Friday today, the 11th of October, we have penetrated the average price of 1747 with as low as 1737. So what can we expect as we come into next week? Well, first of all, the target was completed from $18 to 1747. So that's a 53 cent gain per contract, or a $2,650 trade that was identified by the VC PMI per contract. The program has gone neutral right now. After we complete the targets, basically the automated algorithm goes neutral, and then it tells you to wait until the next 15-minute bar And if it closes above there, that it activates a buy signal. As you can see here, using the 15-minute bar at 8 a.m. on the 11th of October, it activated a buy signal by closing at 1753. One of the important things that I recommend my traders, my students here at the Academy basically is that once you complete the structure of the VC PMI and you meet the targets, particularly if it reverts back down to the mean as it did here, that you do not trade around the mean until the price is at the highest probability factor to trade the futures contract. And that's basically when the price is, it's either at the sell 1 level or at the buy 2 level of the extreme below the mean. The price closing above the average price, so the mean, basically identifies for us the trend momentum has turned bullish, and it has activated again the upper targets above of 18 to 1838 as we complete this week, as we end this week with the previous trade short signal completed. As you can see here, before that, around the 7th, the market pretty much traded around the mean, activating the sell 1 level of 18, and the market completing that target, reverting back down again by the 10th at 6:15 a.m. And again, we've been trading right around the average price, as you can see on the chart, right around the mean. What I want to comment here to end this report is that this metrics that I use, called the VC PMI, is very much like a GPS for your trading, particularly for self-directed individuals, that gives you a perfect Fibonacci structure of 5 levels. Within that structure, it identifies for you the average price, and for you, it gives you the extreme levels with the highest probabilities above the mean and below the mean to return or revert back to the mean. I apply this strategy for day trading. I apply it for swing trading using weekly data, and I apply it for long-term position trading by using monthly data. The market coming down below 1500 in the gold market is probably one of the most interesting buying opportunities that we're looking at after this correction that we basically are experiencing from the high that we made at 1566 not too long ago. If you take a look at the daily chart, closing above the mean of 1747, once again, we're coming into next week with the expectations that the market potentially is going to challenge the 18 to 1838 levels or higher. I will be publishing this week in Seeking Alpha the numbers that correspond to the coming week in Marketplace. Check it out. Have a great weekend. Good trading. I'll see you next week.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.